You're entering the future-ready CNBC TV 18 EBIX Cash Studio.
You're with us here on a fresh new edition of Trading Hour. It's Wednesday morning, 11 o'clock. Markets are basically flitting between green and red. Not very much going on. 3 or 4 point change. But the week so far, and it's just, the third day this week, is up quite a bit. I mean, I was looking at the weekly change. We're up about 1.7%. That's 300 points from last Friday's close to date. And that is just the Nifty. Stocks, of course, all across the board have done very, very well. Broader markets, mid caps and small caps, I reckon, have done a bit more. So maybe just a little bit of halt. All of last week, I mean, US markets were weakish. There has been a little bit of a bounce over the last 2 days in the US, but it's not been anything great. I mean, feeble recoveries at best. And even with that, we've had pretty roaring rallies like the ones we had yesterday. So, not a bad thing for the market to just have a calm, not a very excited kind of a day, which is exactly what we have on our hands right now. 6 odd points on the Nifty. Rima, hi.
Hi, and once again, Asia is struggling in trade. So Asian markets opened higher following the Wall Street rebound, but they've quickly given up gains. In fact, as we speak, the Japanese markets, the Korean markets are down close to about 1%. So once again, India outperformance, the disconnect vis-a-vis the weakness that we're seeing in the Asian markets comes to the fore. So keep your eye on that. A couple of these PSUs, like a couple of these stocks like IRCTC are surging in trade. Keep your eye on that. Hindustan Copper is now up close to about 8.5%. And Lemon Tree, where Kotak Institutional Equities has upgraded the stock to an add rating from a reduced rating, and they've raised the target price to 50. Lemon Tree Hotels is also gaining close to about 5%. Pavitra, which are the stocks and sectors on your radar?
So some of these consumption names seem to be doing really well, right? We did get updates from Godrej Consumer and Marico, and then you have Britannia and Tata Consumer, which are doing quite well today. So you're seeing gains of around 2% on each of those. Some of the financials also holding up well. So HDFC Bank looking quite good. But stocks under pressure include once again from the metal pack, Hindalco, JSW Steel, Tata Steel. These are just some of them. And Pharma once again under pressure after what we saw yesterday. So Divi, Cipla, Sun. These are some of the stocks which are trading in the red. That's the market action, and of course we'll keep coming back to this, but first up, let me take you through everything that we have lined up for you over the course of the next 60 minutes. Market is flat in early trade while the banks outperform after a slow start. We'll discuss the market fundamentals with Varun Goyal. He's head of equity at Nippon India AIF, so stay tuned for that chat. In big positive news, rating agency Moody's has upped its outlook on India to stable from negative. All the details in an exclusive with William Foster of Moody's Sovereign Risk Group and Chief Economic Advisor KV Subramanian up ahead. Also, the earnings season is just around the corner with IT major TCS due to report numbers on Friday. We'll get you the key expectations from the large cap IT space in our special segment, Quarter Se Quarter Tak. Also, the diagnostic sector has been in focus throughout COVID-19. We will tell you how business has been for the diagnostic companies in FY21 and how the competition is heating up in this sector. All of this and more lined up in the next 60 minutes.
Okay, let's kick this off with our first guest of the show. It's markets. What else? I mean, Varun Goyal is head of equity at Nippon India AIF. He's joining us to talk about his thoughts on what's going on. Varun, great to have you here. Thanks very much. Since you are heading the AIF business at Nippon India, I mean, I guess it's a bit more, you have a bit more flexibility in terms of what you can do with your AUM. Unlike just a pure long-only mutual funds. So I just want to understand positioning right now at these market levels. Are you all in? Are you, more hedged at this stage? This is the overall AUM that I'm talking about, Varun.
Yeah, good afternoon, Prashant. Thank you for having me on the show. So as far as our portfolio positioning is concerned, we are kind of participating in the economic upturn that we are seeing in the economy. Our sense is as the economic growth gradually comes back in the post-COVID world, we should see several more sectors and themes do well. I think there is a cyclical uptick in sectors like real estate, in sectors like engineering. There is a lot of spend which is happening on the infrastructure side. To that extent, we are positive on those themes. Of course, there are pockets of exuberance and one needs to be really cautious on that. So we are definitely invested, almost fully invested. We do not take aggressive cash calls, and to that extent, we are participating in the market uptick. Of course, We are also cautious about names and themes where we believe there are pockets of exuberance, where earnings are going to be difficult to catch up. So that's where we are a little cautious. But overall, we believe both the export story, and as well as the domestic cyclical stories are kind of doing well, and we would wish to participate in them.
Varun, morning. Which are the sectors which are looking a bit expensive to you right now? And can you talk about the big changes that you've made in any of your funds, say in the last 1 month, given the way stocks have moved? Which stocks have you bought into? Which stocks have you exited across your various 6 funds?
Yeah, so we remain positive on the real estate space, especially on the residential real estate side. We believe we are seeing early signs of price hikes, and I think the NAVs of real estate companies are very sensitive to price increases. A 5 to 10% price increase, and we are beginning to see that in cities like Mumbai. We are beginning to see that in Bangalore, Chennai, Hyderabad. That will make a material difference to the NAV values. So that's where we would want to increase our exposure. We definitely like housing finance names, building material, wires, cables, tiles. So anything to do with the real estate space, we are looking to increase exposure on that side. So I think across residential real estate, housing finance, these consumer discretionary names, wires, cables, companies, we have around 15 to 20% allocation in the portfolio, which we believe should see very, very good growth. We are looking to trim some positions as far as the IT space is concerned. I think, so especially on the mid-cap side, we have seen quite a big rally. And in some names, we believe that the valuations are getting a little ahead of themselves. So that's where we are looking to book some profits.
Hi Varun, good morning. This is Pavitra. We've really seen this entire unlock theme play out over the past few months. A lot of these stocks, some of the cinema names, some of the hotel stocks, something like an IRCTC, all of these rallying. Do you feel like a bunch of the gains are already in, or do you think there's still a lot more to go here?
Good morning, Pavitra. So I think some of these names, especially on the multiplex sides, on the hotel side, these are, I think some of them are deeply cyclical trades, and even in the best of times, we have seen some of these companies suffer. We have seen multiplex companies coming to the market to raise money every 2 to 3 years. So there is a continuous capex, if not fresh capex, there is a replacement capex, fresh improvement that we need to do. So there's a business which guzzles a lot of capital. Similarly, in the hotel side, it's a capital intensive business, and for the last decade or more, we haven't seen the kind of returns that you would expect. The ROEs in the sector have remained very, very muted. So we would be very, very cautious in these sectors because we believe it will take a very prolonged cyclical uptick for these sectors to see a material improvement in their balance sheets. So while there might be initial, opening up trade, but that excitement may find it difficult to continue unless earnings catch up in a very material manner, something that we are skeptical about.
Varun, sorry, just a basic question. At Nippon India, the AIFs that you run, these are all category 3 AIFs?
Yeah, so Prashant, so we run only category 3 AIFs at this point of time.
Okay.
So whatever funds that we are talking about are purely 100% long only.
Okay. Just to go back to that point on real estate, Varun, I mean, so in terms of how companies book sales, it used to be a percentage of completion. Now it is project completion basis. Even then, it's hard to kind of attribute values looking ahead into what these companies will make. There is excessive focus on pre-sales, right? I mean, all these companies announce pre-sales. So, how are you valuing these companies? Is it, take the pre-sales, annualize it for the year, put a multiple to it and get to a value, and then project it forward? And if that is so, is that the way to go valuing these companies? Because I'm just asking that because of the focus on pre-sales right now.
Sure. So the Prashant, I think residential real estate things have changed materially, post-RERA and GST. I think earlier what used to happen is you used to launch a project, raise money from the people, and then construct the project. A lot of times that money used to get diverted to buying landmines, right? So post-RERA, most of the builders find it difficult to do that. The business is shifting in a very, very material way from unorganized to organized. In fact, the biggest theme of our biggest sector to see the change from unorganized to organized is the residential real estate space. What we are seeing is branded players, pan-India players, state-level players continue to gain market share. In terms of how do we go about valuing these companies, as we look at what is the pipeline in terms of the projects that we have under development. A lot of them are joint development projects where someone else owns the land and someone is a marketing partner. someone, or at times you have these guys owning the project, and from the beginning to the finish, from the construction to the selling, they are doing it themselves. So you look at the projects which are due for completion in the next 5 years. What are the cash flows that one would be getting based on that? And then, of course, you discount them to the current value. Of course, in some cases, there is a historical landmark which might be developed over a much longer period of time. So you assign some value to that. And I think the point that I was trying to make earlier, if I look at the cash flows which will come in for the next 5 years, if I take a 5 to 10% increase in prices, and my cost is not increasing the same proportion, a very substantial part of it is going to come to my EBITDA and my bottom line. So the DCF valuation can change materially. So we did a sensitivity analysis. Let's say for a 10% price hike, various companies, depending on which state, which geography, you could see a 20 to 30% increase in NAV values, which is a very, very material number. So I think the longer call or the bigger call that one needs to make in this space is, what is the kind of price hike that you see over the next 5 years? I'm not saying all the price hike will happen this year, but if you look at our inflation rate of 4 to 5%, and we haven't seen price increases in the last 8 years. So if you add all that, you are looking at 6, 7, 8% price hikes, and if that continues for 3, 4, 5 years, there could be significant upside over a longish period of time.
Varun, just one final question. You don't have exposure to names like an ONGC, Coal India. These are stocks which have done exceedingly well in the last 1 month, and they are not in any of your portfolios. Your thoughts on what we are seeing right now and why they don't make the cut?
Well, I think as far as some of the PSU, oil and gas companies, there is always a risk that if crude oil goes to $100 a barrel, what would happen in terms of pricing? Will the upstream companies have to share some of the subsidy burden? Because our worry is, if the crude prices continue to go up, at some point of time, we might not see complete pass through of those prices, right? And in that case, like we have seen earlier, I think 4 or 5 years back, the upstream companies, bear some of the burden of that subsidy. So that's one reason we tend to stay away from that space. I think similarly on the energy front, our focus would be to companies which are more towards the greener energy or the alternate energy side. I think there are several companies which are trying to build up scale and size on wind and solar. And I think India clearly has a very defined pathway to increase the proportion of solar and wind in our overall energy mix. So we would rather focus on companies in that space.
Okay, Varun, I just came across your Millennial Opportunity Fund also, and a lot of these new age internet companies are sort of, really making a mark right now when they're listing, and also when they're just in terms of the kind of gains that we've seen. Take us through what you think about this. You have put up some really interesting stats that millennials make, 35% of the decisions and all of that. So take us through that.
Yeah, I think, our consumption profile is changing very, very materially, right? So millennials, who are millennials, people born in, let's say, mid-80s, people who are earning, and most of the times they are the decision makers in their families, right? So these are the people who are brought up with internet and things and access to all the technology. And I think this whole change in consumption behavior is changed post-COVID in a very, very material manner. So we are now shopping online, we are ordering food and groceries online and whatnot. So everything is being consumed in a digital manner. We are interacting with clients, we are doing sales online, everything is happening online. And in that environment, those companies, those ecosystems which are able to adapt to these changes, which are able to tap consumers, and most importantly, which are able to deliver their product or service online, will be big beneficiaries. So we have invested in companies which are leaders in, let's say, a digital advertisement space. We believe a lot of advertisements will shift online. We are already seeing the trend, and print has taken the biggest brunt of that. Second, we are looking at companies which can provide ease of transactions, whether it's travel and ticketing, whether it's doing internet transactions. So these companies, in our view, will continue to do well. There is a lot of growth ahead for most of them, and we continue to remain positive in these spaces.
Varun, great to have you with us here. Thanks very much for your time. Appreciate it, as always, here on CNBC TV 18. I mean, the market is blinking red and green, so it's not at all nothing going on, really. Let's just take a look at the market breadth, if we can. Okay, I think I'll just, maybe we can put the graph up, and we can have a look at what the NSE advanced decline. So it's positive, 1,500 to 1,000 stocks, and the gap's narrowed a little bit, but still positive in favor of advances. We'll take our first break here. We are back. Commodities in focus. Manisha Gupta on the other side.